Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that the market has just created this candle here. Now, when you see a candle like this with a very long wick and a red body, what you would usually expect is for the next candle to fill in the wick. So here in the monthly, everything seems quite bearish, and we could expect the market to start this wick fill that we're currently seeing. At the same time, however, we must notice how at the level of this box that I have just placed here, we also have very strong monthly demand and support. In fact, from here, all this move to the upside was created. Again, here, the market tested and rejected its zone to the upside. And this candle here, which is the one that we have just spoken about, also tested this demand and support and immediately rejected it to the upside. So what we could expect in a situation like this is short-term bearish price action for the market to fill in this wick, and then longer term bullish price action rejecting the monthly demand and support. Now, if we drop down on the weekly time frame, what do we see? From a weekly perspective, we can see a very strong impulse to the downside after the correction came. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how the market has just retraced exactly to the 0.618 golden ratio of the Fibonacci taken on this weekly impulse, which is most of the times the level at which the market will create a retracement to before then starting a rejection lower. Now, if we go down on the daily time frame, what do we see? Now, here on the daily, first of all, I spoke about gold a few times in the past. I spoke about it after the creation of this W. I made a full breakdown when the market was around this level, explaining all the reasons for which first we wanted to see this correction and then this continuation higher. And that is exactly what the market did. Then we had this correction here, and I made another breakdown explaining all the reasons from which from here we wanted to see the creation of a new daily higher high. Then the market printed this M pattern here, and when the market was around this area, I made a breakdown explaining why we wanted to see this correction, and then from here another breakdown explaining why we would like to see more bearish continuation. And again, that is exactly what the market provided. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, before we speak about the technical patterns that we're currently seeing on the daily, let's first go and see what we have when it comes to the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market, are currently doing. Now, checking the data here for gold, what we can notice is that lately net positions have been increasing. Now, since we're seeing an increase of net positions overall, we could see the market create a rejection higher. However, it's important to notice that we do not see any longs added with the last report, meaning that overall we could expect a little bit more bearish price action for the market to actually go and test the monthly demand and support that we have previously identified, and then here have some build up of long positions, which we should see reflected also from an institutional perspective here on the COT data. And then from here, we could get the nice rejection to the upside that we would like to see the market create. Now, going back to the daily time frame, what do we have? Now, here on the daily, we can see that this impulse and correction, the correction was all the way up to the 0.32 of the Fibonacci taken on the daily impulse, but then the wick touched all the way up to the 50%. Now, this 50% was lining up perfectly with this level of previous daily support from which all this move to the upside was created, which was turned resistance here, which was a very strong confluence zone from which we could indeed expect this rejection to the downside. So in a situation like this, usually we will see the market complete this pattern, completing this impulse correction and impulse pattern to the downside. So how we could be approaching this continuation to the downside now? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during a potential correction, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for this potential rejection to the downside for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you find at transparentfxtrading.com. Here you will have the possibility to gain access to my entire course with also the rules of the strategies, and you also have the possibility to gain access to one-on-one mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, and the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have a massive discount on the upfront price of the mentorship program down to 97 euros. And also I have partnered with the forex broker Blueberry Markets, and if you open an account with them, you have the possibility to get a full refund credited back inside your trading account. And if you scroll lower, you will have the possibility here to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.